Welcome to the video on navigating post-employment health insurance traps. Today we will explain how benefits gaps happen after you leave a job, why paying a full premium does not always guarantee coverage, and how to protect your credit and recover money if you were improperly charged. We will also provide a step-by-step strategy, diagrams to visualize the process, and quick quizzes to reinforce your understanding. Let's get started. In this agenda, we will define benefits gaps, clarify why paying a full month's premium might not equal coverage, analyze the authority of verbal versus written policy, outline a recourse strategy, prioritize credit protection, review a documentation checklist, and include brief quizzes to confirm understanding. Now, let's move into a short but important disclaimer. This content is educational and not legal, financial, or insurance advice. Regulations and plan terms vary by jurisdiction and by plan. You should consult a qualified attorney or licensed professional to receive advice tailored to your situation. With that noted, we will now define the problem clearly. The core problem is that when employees leave a job, they may assume their medical insurance continues until the end of the month, especially if their final paycheck deducted a full month's premiums. However, the insurance termination date can differ from the employment termination date, which creates a coverage gap. This gap can trigger denied claims, unexpected bills, and collections notices. Next, we will visualize exactly how this trap unfolds. This flowchart shows a typical path. After the job ends, the correct first step is to check the Employee Handbook's written policy. If it states coverage continues through the end of the month, you then confirm the insurer's termination date. If the insurer's date is earlier than the end of the month, a gap is detected. If the handbook states coverage ends on the last day worked, you should anticipate early termination and avoid making assumptions. When a gap exists, you gather your bills and explanation of benefits, then send a written demand citing the handbook. If the bill is already in collections, you pay immediately to protect your credit. Otherwise, you give the employer a written deadline to respond. Next, we will clarify why written policy outweighs verbal assurances. This comparison highlights that verbal assurances from HER or colleagues are not controlling if they contradict the written employee handbook. The handbook provides the authoritative policy on benefit continuation after separation. Therefore, whenever a verbal statement conflicts with written terms, the written terms govern. Consequently, you should obtain the exact text from the handbook to anchor your recourse. Now, let's map the stakeholders and documents involved. This mind map shows the interplay between the employer's HR, payroll, and plan administrator, the insurer's eligibility file and termination date, the employee's expectations and credit risk, and the crucial documents such as the employee handbook, explanations of benefits, termination letter, and proof of premium deductions. The eligibility file ultimately dictates coverage, while the handbook provides leverage if the eligibility was set incorrectly. With that context, let's move into a clear, step-by-step recourse strategy. Follow these steps in order. First, locate the precise handbook text on post-separation coverage. Next, compare that language to the insurer's termination date. If there is a mismatch, draft a succinct summary that includes key dates, amounts, and the specific handbook citation. Then, send a formal email to the former employer's management requesting reimbursement for the exact amount owed due to coverage that should have been in force. Set a concrete response deadline and ask for written confirmation. If the bill has already reached collections, pay it to protect your credit score and continue your reimbursement claim with the employer. Finally, if the employer refuses despite a clear policy breach, small claims court may be the most efficient route. Document everything and bring your records. This timeline illustrates a practical schedule to act quickly. Within the first 1 to 3 days, obtain the handbook and verify the insurer's termination date. By day 5, send a formal demand that cites the relevant handbook section and specifies the exact reimbursement amount. Between day 5 and 10, follow up and set a firm deadline. At any point a bill hits collections, prioritize paying it to protect your credit score. If the employer denies responsibility after your deadline, use days 10 through 20 to prepare for small claims court, and then file and serve by day 30. Moving on, let's check your understanding with a quick quiz. Quiz time. The question is, paying a full month's premium on your final paycheck guarantees coverage through the end of that month. The options are true or false. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is False. A full premium deduction does not guarantee coverage through the end of the month. The insurer can terminate coverage earlier depending on the eligibility file and plan rules, so you must verify both the handbook and the insurer's termination date. This sequence diagram emphasizes the order of operations when a bill is already in collections. After receiving services, a claim may be denied due to early termination and then sent to collections. When the collector contacts you, pay the bill right away to protect your credit. Then immediately send a written reimbursement demand to your former employer, citing the handbook and listing exact amounts. If the employer denies reimbursement despite a clear policy breach, escalate to small claims court with complete documentation. Next, we will provide a concise document checklist to streamline your claim. Use this checklist to organize your case. Obtain the handbook section on benefit continuation to establish the policy. Gather proof of premium deductions from the final pay stub to show payment. And secure insurer confirmation of the termination date to verify eligibility. Compile all bills and explanations of benefits to quantify your claim. Include your termination letter to document the employment end date, and retain email correspondence to demonstrate that you made formal, timely demands with clear deadlines. Now, let's reinforce the most critical action with another quick quiz. The question is, if your medical bill is already in collections, what is the best first move? The options are: 1. Dispute with the collector and wait to pay until resolved. 2. Do nothing and hope the employer fixes it. 3. Pay the collection to protect your credit and then seek reimbursement. Or 4. Immediately file a lawsuit against the employer. You may pause the video now to think about the answer. We will discuss the answer in the next section of the video. The correct answer is to pay the collection to protect your credit, and then seek reimbursement from the former employer. Prioritizing your credit score prevents long-term financial harm, while you continue to pursue recovery using the written policy and your documented demand. These are the essential points. Written policy overrides verbal assurances. Paying a full month's premium does not guarantee coverage. Confirm the insurer's termination date right away. If a bill is in collections, pay first to protect your credit and then seek reimbursement. Document all communications and set firm deadlines. And when a clear policy breach exists, small claims court may be the most efficient remedy. To wrap up, identify any coverage gap early by checking the Employee Handbook. Align the handbook's policy with the insurer's termination records. If a mismatch exists, and you paid for a period without coverage, send a precise written demand specifying the exact amount owed. If a bill is already in collections, protect your credit by paying it, and then continue to seek reimbursement. If your former employer refuses despite the written policy, consider small claims court and bring thorough documentation. Thank you for watching. If this video helped you, please like, share, and subscribe for more practical guides. We would also love to hear your experiences and questions in the comments so we can continue to help others. See you in the next video.